Perfect. Welcome, everybody. Scott and I are going to give you our soulless take. Did you get what I did there?
I don't like soulless.
Soulless?
Yeah. S-O-L or S-O-U-L. Either one.
Solely, our co-host is sick today. Looks like food poisoning from Thai food yesterday. But today we're going to give you our take on front-running the Trump trades, how selling naked puts leaves you exposed, trillion-dollar IPOs, separating noise from signals, your calls, and we'll end with a look at today's markets, which have already been incredibly volatile. And I've been trading up a storm since last night, so ready to talk to you about virtually everything. 989 Lossdog. I'm Tom Sosnoff, he's Scott Sheridan. Don't be shy. Pick up the phone, call in, chat with us for a few seconds. No small talk. Right, Scott, you got that? No small talk today.
Let's do it. Only big talk.
Only big talk, no small talk. I got the clicker.
Let's do it.
This person writes, I've been selling naked puts on ES, and the strategy has worked really well for me so far in 2026. This approach leaves me very directional, though, to the upside. So I'm interested in a hedging approach, which tends to be more efficient in terms of capital use, selling calls or buying puts while still managing risk effectively. This is from Christy.
Well, there's a couple different questions here. So in terms of capital usage, obviously buying options is infinitely less capital intensive than it is to sell because you have margin on the sale. And if you buy an option, you know you can only lose what you pay for it.
It's defined risk. They said buying puts versus selling call spreads.
They said buying calls, I'm sorry, versus selling puts. I apologize.
So this person's strategy, Christy's strategy, is she sells naked puts on the ES, and it's worked really well, but she wants to hedge a little bit, so she's wondering which is better, to buy puts as a hedge or to sell call spreads as a hedge.
But if you, I'm confused here because if you sell call spreads, you're just adding to the.
No, you're not. You're short puts. You're selling.
Oh, so you're short puts. You're selling call spreads. Yeah. I don't know. Personally, I would do a put spread. I would not sell a put and then sell a call spread. I would just sell a put spread.
Thank you, but that's not the question. So I'm going to help you, Christy, here.
Go ahead.
We've confused Scott, but that's okay.
You have confused me on this. It's not written clearly. Go ahead.
There's a strategy we came up with years ago. Actually, Liz and Jenny came up with it. It's called a Jade Lizard. It's where you sell a naked put, and to take a few deltas off, to shave a few deltas off the naked put, you sell a call spread above the market. What you've done here is just the put side, which has worked great. And statistically, if you just sold puts over the last 20 years, it's the best strategy there is. But
ever.
But what I would do, because it's very capital efficient and requires virtually no additional capital because you've already put up money for the short put and you can't lose both ways, I would sell call spreads against it, effectively putting yourself into a Jade Lizard. And to me, that is one of the best bullish strategies out there. You sell puts, sell out of the money call spreads against it. Those are credit spreads. And so far, so good for the last 20 years on that strategy. It's called a Jade Lizard. And you can do it as a single click on most platforms. In the ES or SPX or SPY or whatever you want. Single click. All right, good start. So as a lifelong trader, does it bother you that it seems someone front ran the latest Trump news using crude oil and S&P futures?
This has nothing to do with being a lifelong trader. Yes, it infuriates me as being a lifelong trader. It kills me more just as a person with morals. Like, this is so disgusting what we are witnessing right now. The bar goes lower every single day, and people just seem to say, well, it's not going to get any worse. Yeah, it's not going to happen. Don't worry about it. No, I don't care if it was, I've heard 500 S&Ps, I've heard 4,500 S&Ps, I've heard 1,800 CL, whatever. It doesn't make a difference. I was reading an article yesterday, and I don't know if I agree with this. I'm not sure where this comes from. I'm not a legal scholar, but they said this was treason. And I'm not sure why it would be considered treason, but the fact that if they're really doing this, and I have every reason to believe that they are. I don't know who the person is. So the question is, was it somebody within his world, in his orbit, or was somebody outside the orbit who has access to somebody in the orbit who paid them a lot of money to give them the information? But this goes back, talking about insider trading. And I know you and I talked about this.
Yeah.
But to say, listen, it's not a fair fight if all of a sudden the markets are pure. They have tremendous respect. You have credibility. If you now have a situation, which in some part we're seeing this breaking down the prediction markets, this is happening, but on a much smaller scale. If you now have a situation where somebody in this administration, don't know who it is, clearly close ties to Trump because they knew he was going to do this, what's your risk if you know he's going to come out? Let's just say right now, in 10 minutes he's going to come out and say, we have reached an agreement with Iran and everything's over and they've agreed to everything that we've asked for. Is there any risk that if you were to buy S&Ps and sell oil here? Zero. So you're going in on a completely riskless trade, knowing that this is going to happen, and somehow you can wake up and look at yourself in the mirror in the morning. Vile, disgusting. These people should rot in hell.
There you go. I agree. It doesn't mean that I would, being a lifelong trader, it bothers me because I feel like, at different points in my career, maybe I was on the other side of those trades. I've never been on those trades. So sure, that I feel like that bothers me, but I also don't want to say that every time there's a big order that it's somebody's front running something else. I just think, an occasional coincidence, okay, I can live with it, but not
10 or 15 minutes before this comes out. Doubt that was coincidental.
I don't know. Trump's level of criminality is off the charts on every, if it was even possibly to be, if it was measurable at any level. But that said, I don't even believe he's stupid enough to run the risk of saying to one of his insiders.
But the question, there has to be, for there to be risk, there has to be consequences.
Yeah,
there are no consequences.
I do feel like the likelihood here is that somebody inside of his inner circle spilled the beans to somebody else, who spilled the beans to somebody else. Do
you think anybody's going to be investigated or prosecuted for this?
I do. I don't know if anybody's going to be prosecuted. I would bet $1 billion somebody's going to be investigated.
Okay, and they're going to find no wrongdoing. Look, there's nothing to see here.
They already know. It was like $580 million of notional. I'm not sure how that breaks down into actual contracts. I got to think about the size of the contract. So,
well, here, a SPU would be, it's just say right here, it's 6,600 times 50. So SPU is 330,000.
Yeah.
So 500 and how many? 558 million?
580 million.
558 divided by 330 is almost 1,700 SPUs.
Okay. So if it was 1,700 contracts,
on 1,700 SPUs.
Just to understand, the CME, where these trade, has surveillance like you've never seen. This is not something. It's not like they don't know who placed the order. They know
for sure. There's a paper trail for this whole thing, but nothing is going to come of it.
Well, they know what firm placed the order. They know what firm cleared it. They know what firm placed the order. They know whose account it came from. You can track it all the way back. And so the question is, there's the CME has a lot of risk, integrity risk here, if they don't track it back. Let's put it that way. So it'll be interesting to see, how hard Terry Duffy, who is the chairman and CEO of the CME, how hard he pushes on this. Let's see. He's a Trumper. Let's see what happens.
Do you want to make a wager as to whether or not somebody's prosecuted for this one?
I don't know that somebody will be prosecuted. Like I said, I would bet.
Fined and disgorged?
I would bet $1 billion that they're already deep into who placed this order. I don't know what that means.
Okay, I don't either, but I'm guessing from what I have seen, what's happened with criminals who are getting pardoned, that
Yeah, I
nothing's
know,
gonna
but we
happen
can't
here.
we can't
So,
we can't lump everything together. It's not a good sign. It's not a good
it's
look.
it's not, and it's not good for the markets because
No.
again, look at what's happening right now. Just the news cycle around this for anybody who's in the markets. If you're not in the markets, you have no idea that this happened, is my guess.
Yeah.
But you look at this, and the person, there's no name on it, but does it cause somebody pause to now participate in the markets?
Well,
which
I'm
are-
not. I don't think that would be the case as much as I think there's new markets that are popping up, like you mentioned, the betting markets and the event-based markets. And I
Yeah.
think in that case, this trade's obviously way too big for those markets to handle, and even a hundredth of this size. But the point is now with a lot of legislation in front of Congress and the Senate to try to ban certain types of trading on event-based contracts, I have to think that this is the worst possible news for them because it gives
Correct.
the foes a lot of bullets.
Totally agree.
Yeah, I think that whoever did this, if you get away with it, I think that the long-term repercussions of this are going to be pretty bad. Anyway,
Agreed.
so this person writes, Tom, I read that SpaceX is looking at a $1.25 trillion IPO. And in fact, I also read that somewhere last week. Did they file or so? I think they might have filed. And OpenAI has been talking somewhere around $1 trillion IPO. I know their last capital raise, which was shown to us, was 850 billion. So it's pretty damn close.
Yep.
Do these numbers scare you at all? These are fun questions today. What do you think about $1 trillion IPOs?
Yeah, they scare me. I passed, for a different reason, but I think I passed, and you obviously saw the same deal. I want to say we saw SpaceX at 500 or maybe 650, something like that, but I have no
passed.
interest in Elon. So I took a pass on that. I just took a pass on the AI, on the OpenAI, at 850. My feeling is this stuff, when you say it's priced for perfection, there's so much hype around this. And what's interesting to me, and it's interesting and a little bit scary, that these deals now are trickling down to us common folk. I don't think we were going to see these 5-10 years ago. Now they're coming down because I think the big boys are seeing some risks, some fractures here. So where is a $1 trillion IPO? Where is it going?
5 trillion? That's
Okay. Or it could be going back to 500 million or 500 billion or 250 billion.
Could be.
From my perspective, no interest whatsoever until this stuff's proven. To me, SpaceX would be the better of the two. It might be completely wrong, but SpaceX to me is better than the two because I think there's so much more upside to space, and they are really good at what they do. OpenAI, to me, there's other companies that are out there that could put a lot of pressure on them. Again, that's if the whole sector maintains. I am not throwing shade at AI. Amazing. It's going to be life-changing. What I'm questioning is the valuations of these companies. Just again, we've talked about this going back, to the dot-com bubble. The internet, amazing. Still going really strong right now, but a lot of those companies didn't make it. So yes, these numbers scare me.
It's a very different. The companies that didn't make it in 2000 are not the same as the companies that are too big to
Didn't
fail
say
right
that.
now.
I didn't say it.
Yeah,
These
I
companies are
understand.
capitalized in a very different
Yeah.
way. So you might say that they're too big to fail, but I think it's also for some of these companies, OpenAI being one of them, it's a house of cards. So when you have Nvidia buying, putting money in so that they come back and buy chips from Nvidia, it's just a vicious cycle that if this thing breaks, I wouldn't want to be left holding that back.
Well, I think at
So-
some point the AI companies are going to start to eat their own, and so they've been talking a good game. Whether it's the CEO of Perplexity or the CEO of Anthropic or the CEO of OpenAI, it doesn't really matter. They've been talking up their game like it's going to be world changing and blah 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 and.
Yeah, but you would be doing the same thing if you were running one of those companies.
I understand, and these numbers do scare me. I do think $1 trillion IPOs are a lot less interesting as an investor, but I also think that we're in a different world right now, and some of these companies are too big to fail. But for me, I I'm just trying to think about, let's see. Well, now they're saying SpaceX 1.5 trillion.
Yeah.
That's
what I thought.
Yeah. I mean, fuck Elon Musk. I can't stand that prick. And so, I basically gave away my Tesla because I can't stand him. So
The 6 did the same thing.
yeah. So I couldn't care less if it goes for 2 trillion. I'm never buying it. I'll trade it. Like, I'll trade anything because it's just, to me, it's just another underlying. So I'll wait till it goes public, and I'll wait till it'll have an active listed option marketplace, and I'll trade it just like I trade Tesla. But I'll never buy it. It will never be a buy and hold for me. And these numbers scare me. $1 trillion IPOs scare me. They're just not interesting to me.
But think of the hockey stick, that we have had here.
Yeah.
What has fundamentally changed?
Everything. Everything.
Okay, but
Money is
everything has
available.
changed in a matter of 10 years.
20 years, everything's changed. Yes,
Okay.
everything's changed.
Again, and you're telling me things can't change and go back? I'm not saying going back.
It's not 1980 again. It's not 1990 or
it's
2000.
1980, but what I'm
Everything
s-
has changed, Scott. Everything.
Yeah. Everything is priced for perfection, and I am concerned about what I see, and I think that this is going to be a rough next, year for the market, and we'll see how these companies survive.
Well, it might be a rough year for the market, but everything has changed, and we're not. This is not your 1974 markets anymore.
Didn't say it's a 1974 market. What I'm saying is that if somebody's willing to go in and buy something, again, I think people are doing this out of FOMO, and they're saying, well, I don't want to miss this, so I don't care if it's 1.5 trillion.
I don't
And
think you're right.
IPO will be oversubscribed, and on the opening day, it will explode.
I don't think this is a FOMO thing. And the example I'll give you is like sports teams. And I remember when the first sports franchise was like $1 billion. And people were like, this is the most ridiculous thing ever. $1 billion for a sports franchise. A few years ago, it was 50 million or 100 million. Now it's $1 billion for a sports franchise. They'll never be able to sustain this. Now they're 10 billion. The next trade will be 20 billion. And now they got $5 trillion companies. Maybe you're going to have a $10 trillion company. I don't know. Maybe they're the same as the asset class. Let's put it this way. I think you lose a lot of sleep trying to figure all this crap out. And I think what you got to do is just look at them and say, hey, you know what? They're tradable.
They're tradable.
From the dog pound. Interesting little question here from the dog pound. From Maria, who says, when Tom buys the dip on shares of a company based on price extreme, how much does he buy? What is the position size? Does he follow a rule, or does the size change based on the conviction? Well, I think, Maria, there's no question the size changes based on the conviction. And when I buy stuff, I usually start at my smallest increment, whatever my smallest default increment is. So let's say for some people it's 100 shares. Let's say for me it's 500 or 1,000 shares, okay? Because that's usually what it is. And that would be my first tranche. And then I'd buy it, and then I'll see what happens. And then I'll decide if I want to buy another 500 or 1,000 shares or another 500 or 1,000 shares based on if it continues to move to the downside.
And then when it does, then it gets moved into the long-term portfolio.
Well, like I do buy a lot of stocks, on dips. I bought 2 stocks this morning on dips already when we opened. So I also bought some 10-year notes this morning and sold a bunch of puts overnight in 10-year notes, like we talked about yesterday on air. So I am a buy the dipper, and I'm a sell the rallier. But I use my minimum allocation, which is a tiny fraction of what I have, and I built it up. And then I just try to, trade them or scalp them. But I'm never, if your question is, are we ever all in? The answer is never. It'll take a 6-month, brutal down move, crushing down move for me to be all in on an underlying. I'll nibble all the way down.
What could happen that you would be, there's nothing, because at some point it would be so
2008,
bad.
The end of 2008, I was pretty much all in.
Okay.
I was in. I was all in.
But that evolved, and that was ugly. And
that was 6 months. That was 6 months.
You did not feel good about that one.
I never feel good about buying anything on the way down because it always feels like you're buying too early.
Correct.
Yeah, always. It never gets any easy. It's never easy. Like, I wish I had the ability to buy something, Maria, and just turn it freaking off and just like buy it and then not even look at it. And I'm getting a little better at it, but it's taken me 45 years.
Okay. Baby
So,
steps, at least you're getting
Baby
there.
steps.
Remember, 989 Lossdog. Come on. Just
Yeah.
that you're going to make us think you only want to call to talk to Soul.
Exactly.
989 Lossdog. What do you got?
So this guy writes, how do you disconnect the real-time news from the real-time tape?
Good question. How do you do that, Tom?
It takes a lot of trades to be able to do it. It takes a lot of market participation, because if you woke up this morning and read all the crap that's out there, I mean, I can tell you, I could almost recite the headline that was personalized for me from I forgot which source it was this morning, but I was reading a headline that said, Tom, here, essentially check it out. And it was like Iranian naval commander gets killed, oil prices are exploding, TSA lines are longest that they've ever been, and there was a couple other bad pieces of news. It was everything was depressing, and no end in sight for the war, all that kind of stuff. And you read that, and you get a down opening, and you're thinking to yourself, how the hell are they going to rally? And they've already made back
Half.
over half of the sell-off pre-market in virtually everything. Gold's come back by $60. Silver's rallied $2. S&Ps have rallied 35 handles already, and the bonds have rallied 10 ticks. I mean, so you have to disconnect it. What I always say is, you have to look at there's one side of your brain that kind of, you want to be aware of what's going on in the world. And then there's the other side of the brain that's the trader, which is just, all right, what does the tape say? Because however that tape is running and whatever you're seeing up there, I mean, you can look this morning, Amazon's up, Apple's up $3.50, Microsoft's up, Netflix is up. You start to look and you're like, okay, I'm not sure what they're hitting,
Well, Meta's down 21, Google's down 4.
Well, Meta's an interesting case because, the news, Meta's a perfect example. Meta yesterday had probably the worst news you could have. They essentially, lost a huge tobacco-like ruling, and deservedly so. I put Mark Zuckerberg in the fuck Mark Zuckerberg category, the same as fuck Elon Musk, and so.
Wait. Tell us how you really feel.
Oh my God, I hate that. I hate that motherfucker. Anyway, but yesterday I'm watching the tape when that news came out, and the stock was up $1 after.
Yeah.
It never moved. It was up
I'm
90. It's up $1. It's up 92 cents. I'm thinking to myself,
Yeah.
if it was any weaker, I'd have got short. But it looked so strong yesterday, and I'm like, how's that even possible? And so I had to disconnect and not put the trade on. Today it's down $20.
Yep.
I'm not sure what it would be doing if the market was up today, but whatever. I guess my point is, we have become, from being lifelong traders, we've become very good at disconnecting between the real-time news and the real-time tape. And our focus is always on the tape.
Yeah, but it's also so that people don't think that that's, the only thing to look at. Listen, if you have a conviction in something, and sometimes it takes a while, like exactly with Meta, I was shocked too. I looked, I'm like, how is this stock not lower? Well, it digested today. So sometimes it takes a little while for information to work its way through. And obviously now people see this for Meta, if it's down $22, which is a 3.75% move. It's a big move. So, now there's people questioning, the value. Listen, it's still a $572 stock. Yeah. Would I get shorted here? No, but I think it could be an interesting trade. IVR is only 29.
Yeah, and it's they've already sucked a lot of juice out of it. I like other, for short premium plays, like I sold premium yesterday in Micron because the volatility in there is much higher. I think there's better plays for short premium than Meta. And plus, I never like the markets in Meta anyway. It's very Meta and Microsoft.
I was looking at Nvidia today. The IVR in Nvidia is 7.
Well, because they're post earnings, but if Nvidia at least trades and you get tight markets, Meta and Microsoft not so much.
Not so much. Agreed. All right, listen. Thank you. We have 2 calls.
Yeah, I know. We're gonna get to them in a second, but I just want to say that this question also, I got a very similar question to this from a from a reporter for a large network that's over in Singapore, and got a very similar question to this last night. And so this is not just like a very retailish question. The question that she gave me was, hey, like, how do retail traders, how do self-directed traders deal with what they see in the news? And I gave her a very similar answer, but this is a question lots of people have. Anyway, we got a bunch of calls, like Scott said. Mohammed, what's going on, man?
Mohammed from New York.
How are you guys?
We're great.
Hi, how are you guys?
Great.
Good. How
What's
you
up,
doing?
man?
All right, so I want to take Tom back to the tariff days when we talked, and the market had tanked, and Tom had great belief in the resilience of the market. We are back again there when, a tweet could take the market up 100 points or 100 points down. Does Tom still believe in the resilience and the efficiency of the market in the upcoming days, or is there any way that would affect a retail trader's trades in a market as choppy as this?
I mean, when you think, Mohammed, when you look around and you think of all the bullshit that's going on now around the world, all the crap, all the lies, all the deceit, all the lack of integrity, when you start thinking about all the stuff that's going on everywhere, and then you take a step back and take a look at the stock market and the futures markets and things like that, you wonder, how can these markets be so damn good and everything else in the world be so damn bad? And so if you're asking me, do I still believe in both the integrity and the pricing efficiency of the markets? Yes. Do I still believe that the markets are capable of going down? Of course. And many times, I mean, like right now, I'm definitely not bullish, but I also think that we're in a different world than we were, 20 or 30 years ago. And it takes a lot to turn this thing upside down and turn it on its side. So I hope that answers your question. Yes, I still believe in efficient market theory. I still believe in pricing integrity. And in certain cases, I believe there are certain things that are too big to fail. But I'm not some raging bull. That's all.
All right, great. So you still believe that the markets, are resilient enough to take whatever bullshit's thrown their way?
Yes.
Well, wait, be careful here. Be careful, because Mohammed, I want to be careful. Tom did just say he's not saying the market can't go lower.
Yeah, I'm not
listen, the
bullish
market
myself.
right now has withstood a lot of body blows. Again, separating the news from the tape. If you just read the news and didn't know where the market was, you just read the news over the last month, you'd be like, oh my God, the market must be significantly lower. We're down 5-6%. That's not a crazy number. Could the market?
I think it's healthy.
Tom, would you say could the market sell off 10% from here?
Sure.
Of course.
And I think it'd be healthy. I think a 10, 15, 20% sell-off would be really healthy, and it would clean out a lot of the stuff. But Mohammed, you know what? You have to trade what's in front of you. Like if you start trading for a 20% decline or a 20% rally here, I think you're cooked. I think you have to trade what's right in front of you, and
you're going to miss a lot of opportunity
Yep.
and potentially get run over depending on which side you are. If you take that, hey, we're going to do this or we're going to do this, as opposed to just saying there's really good opportunity right now with volatility elevated.
Hey man, thanks, Mohammed.
I get that.
Thanks,
I get
man.
that. So all right, guys.
No.
Thank
You can finish
Thank
your thought. You can finish your thought. Go ahead.
I just wanted to ask, how many more body blows could the market take? It's like.
Hey man, from your mouth to God's ears, I have no idea. Like your guess is as good as ours.
All right.
Somewhere between
care.
one and a lot.
Yeah. Take care,
Mohammed,
Mohammed.
have a good day. Let's go to Ron in North Carolina. What's up, Ron?
Hey, good morning, Scott and Tom.
Hey.
First time caller here.
Hey man.
And,
Thank you.
Hey, I just wanted to ask you about, we talked earlier about the ES and the oil trade.
Yeah.
Oh, there goes the trade. Do you think that would be a good pairs trade to put on, going short the oil and long the ES?
Oh man,
we've talked about this
We
one.
have talked about that, Ron. On a very, like, if you want to do it like on a micro level, sure, you can.
Right.
I mean, you can certainly try. I mean, ES is cheap and oil is expensive. So on a micro level, the only issue I have with this trade is that they are inversely correlated right now. So you you're either going to be right, or wrong. They're not like if I don't know that here a better way to explain it is I don't know that you have to do both sides, because if you like the pairs trade, you could just either sell oil or buy ES, because they're gonna move inverse of each other.
When one moves, the other's going to move.
That's right. So I don't even know that you have to do the pairs trade, but if you wanted to, you certainly could.
Okay.
But
and
keep it
Scott, and Scott, I'll bet you a cornbread future that nobody goes to jail over this, because name me the last time a politician or somebody involved with politicians went to jail over anything on either side of the aisle.
Well, my favorite.
Only Martha Stewart, unfortunately.
My favorite was from the flash crash in 2010 when that whole thing broke down, and they finally got the guy. It was some kid in his mom's basement in London that was trading ES, and they claimed that he was spoofing the market. It was the dumbest thing in the world.
Yeah, they got a kid with like a $200,000 account in
his mom's basement in London. So, Ron, I'm agreeing with you. Nobody. I mean, again, they're going to open it, close it, and say nothing to see here. Go ahead. What else do you want to talk about?
I think that the CME and the CFTC. So they're in the futures world. It's a little different than the stock world. And so the NFA has all these crazy, complex oversight rules, and so does the CFTC, and the CME have an obligation here. They're going to have to say something. I don't know if they're going to say anything.
I don't know if they're going to have to say anything. They could just say that we investigated it and everything looked normal.
Oh my God, they can't say that.
Well,
Okay.
Well, if let's just say the three of us on this phone call, if between the three of us, we were the ones that made the entire trade, yeah, I think we might have some answering to do. But if this is spread out and say 50 people did it, I bought 5, you bought 7, somebody else bought 100 maybe.
Yeah,
it might
I
be a
don't
little
think
tough.
so. I'm going. I'm going with one account made these trades. It could have been multiple people behind the account, but I'm saying one account.
I'm
Right,
going.
well.
My gut says somebody. I have a crazy theory on this. Is that there's somebody that some firm, some prop firm, or some like it could be. I'm not throwing Goldman Sachs or J.P. Morgan or Morgan Stanley under the bus.
But you'd love to.
But I'd love to. But still, there's some firm out there, Ron. This is my guess, that has a customer that they know is very tied to the White House or tied into that circle. But that person,
Right.
probably traded like 5 or 10 contracts. Okay, but when they saw that person trade based on past performance, whatever desk that is, like let's just say it was the J.P. Morgan desk or the Morgan Stanley desk, the prop desk. As soon as they saw that person buy a 10 lot with 15, whatever timing was, they went in and bought 1,500. Because that's how these guys think.
And it's not just the exchange. It's not just the CME that would have oversight on this. The firms have to have oversight.
Yeah, but the CME has all the.
Well, they have all the data, but
Yeah.
they're going to know everybody that was on that trade. But the firm itself, and I could tell you back at Tasty, there were some trades that went up that caught my eye, that were brought to my attention, and we did look into them, because you say, if all of a sudden, like to Tom's point, if somebody's normally trading a 1 lot or a 5 lot or a 10 lot, and they come in and they do a 1,000 lot or a 1,500 lot, listen, you love it as a firm, you're going great, really good business, but you have to, throw up the caution flag and say, is there something going on here?
Well, just like a casino, you bet in $25 a hand, Ron, and then all of a sudden you bet
but
bet
that's why they limit
2,500
you at the table. They're going to say,
No,
this
I
is
know, but you
25.
go 25. If the table limits $25 and the max, if the minimum is 25 and the max is, let's just say 2,500. If
Yeah.
you go 25, 25, 25, and then you go 2,500, they're kicking you out.
Yep.
Oh, here comes Tom. I'm actually surprised. Unless it's Scott, because Scott would like to do that.
I'd let you do it all day. Ron, thanks, man.
Thanks,
All
Ron.
right, talk to you later.
All right, take care.
All right,
That's a good
let's
question.
go. I hope I get this right. Kapil in Chicago.
Kapil.
Kapil?
Yep.
Yeah, hi Scott, hi Tom, first time caller here. I've spoken before on Tasty Network, but this is first time.
Awesome.
I have a question. Hey, I have a question here, like how you trust your broker in the sense, like for Tasty, Thinkorswim, or Fidelity, even for some of the liquid SPX option, I have seen mid price differ a lot, and going with the gut. Normally, I have a habit of putting the mid price, and when my order gets filled, then I try to see in the other platform. I am seeing the mid price is difference, and it's a lot of difference, and especially stock like IBM or something which is illiquid. Then I am seeing my broker itself is taking 30-40 cents out of that. So, what is the best way to see like we are not paying more based on the mid price of options and how
Well,
to?
Okay, so something is wrong with your data feeds because for sure for the SPX, IBM trades is multi-listed, but the SPX trades only on the CBOE. So there's one data source. That's it. Those are the markets. Now, like talking about integrity, and listen, I would love to pick on some of the other firms, but at this point, there's no way I can because everybody does the same thing with their orders. They take the orders and they get routed through an aggregator, they get sent to the exchange. Now, it is possible that you could put a spread to buy or sell in one account, you put it in another account at different firms, and they wind up on different exchanges. One fills, one doesn't. That can happen. And if that happens, what I would tell you is cancel, replace the order, and the other order should fill. But talking about the SPX, there is no way that you're seeing, unless there's something wrong with your data, that there's no way that the markets are different from one firm to another. None.
Yeah, and the thing you have to realize is that, sometimes the markets move so quickly now that just like a $1, like a one handle move in the underlying future could generate a fill, at one firm, and then if it most likely will generate a fill at the other firm, but it could be it depends on your contract size too and all of that, but generally speaking, everything is going to be exactly the same regardless of the firm. It's just a question of where you put your order in relative to mid price.
Yep. And I can tell you a great story. Back at Tasty, we had a large customer who traded tons of SPX. And it got to the point where he kept telling me that they know it's him and they're moving the markets on him. and I kept saying, no, they don't know it's you. And trust me, you're not big enough to move the markets. So I flew him out. I couldn't take it anymore. I flew him out to Chicago and I took him down to the floor. And I said, I want you to enter an order while we're standing there and I want you to see what happens. It totally blew his mind. He entered an order. It wasn't like guys sitting around going, oh, it's this guy's trade. We're going to get him for a nickel or a dime. He's like, oh my God, this was the greatest experience of my life because he actually saw how pure the markets are. You just have to remember that in the SPX, because it's such a big product, that they might list the markets is this wide, but the actual market is this wide.
It's one tick wide.
Yeah,
around
I know
mid-price.
it's one tick, but it's tight. So to Tom's point, if you want to do a trade, go in at value, up or down a little bit, and that's it.
Yeah, move it 5 or 10 cents off mid price. That's a half a penny or a penny in the SPY. That's all it is.
But there is no
and you'll be
SPX
filled.
for sure. And again, the other thing is, remember in options, it's National Best Bidder Offer, NBBO. So you can't get filled out on a single option. You can't get filled outside of the bid or the ask.
Does that answer your question, Kapil?
Yeah, that's very helpful. Thanks, guys. Thank you.
All right.
All right, awesome.
So the last one, I'm going to go to this. We have the poll in the dog pound. Only 28% would buy SpaceX at 1.5 trillion. I would be on the 72% side of that.
Me too. So in a previous show, we discussed Jim Simon's strategy and mentioned that he never really showed any details. With the Lossdog platform, will the Lossdog platform show your portfolios, and will it show your secret sauce? It will show our portfolios, and we don't have a secret sauce. like McDonald's has a secret sauce.
Trader Joe's has a secret sauce.
Trader Joe's. I don't like Trader Joe's secret sauce. My favorite secret sauce, I'm going to go online here, is Dave's. I know a lot of people like Cane's. I happen to like Dave's.
Yeah.
Dave's hot chicken has my favorite secret sauce. But I think if you're talking secret sauce, that's what it is. I personally don't have a secret sauce when it comes to trading.
You do.
I don't.
You do. What's that?
I don't. I trade a lot, but I don't have a
You
secret
do.
sauce.
That's your secret sauce. Is that
Yeah.
you've been doing this? You have muscle memory. That is your secret sauce. You just have muscle memory.
Well, that's the
because
only
you've
muscle
been
memory I
doing-
have then.
What's that?
That's the only muscle memory I have.
Well,
Because the
that's
rest
true.
of my muscles don't have any memory.
That's true. But I mean, you could do this. You do this. I'm not saying you could do this. You do this in your sleep. So
I literally
it is
did trade in my
is
sleep
the-
last night.
That is the secret sauce. Your instincts are built off of experience. That's the secret sauce.
I'm Tom Sosnoff. He's Scott Sheridan. Thanks for all the interplay today and all the back and forth. This was great. From Chuck, he just writes into the dog pound and we'll post this question. When rolling your short puts out in time, I find that I get a better price when I'm doing one contract at a time versus two contracts at a time. Why is this? Chuck, it's because you're insane. No, just kidding. You're not.
Market makers only want to trade one lot.
No, you're not. There is an occasion, and I will tell you this is a little secret. Every once in a while we give away market maker secrets, but every once in a while a one lot blocks a market, and so the
Yes.
guys and the market making firms will try to get rid of it because they don't
Yes.
want it messing up their markets. And so
Yes.
maybe that's what you're seeing, but generally I would say 98% of the time a one contract versus a two contract versus a five contract
No
makes
difference.
no difference whatsoever. Zero
Yeah, but
difference whatsoever.
You keep giving inside tips. That's a good one though, but it is true. And I will say that I've always said there's no such thing as free money in this business, and I still say there's no such thing as free money. But when we started Tasty, we did have a customer that was doing this, and I'm not going to say where or what they were doing, but they found a way. They were tricking the computer program systems from the aggregators and saying, putting a bid in, they were like a little gnat, like boom, boom, like just get out of the way because they were.
That's not what he's saying, though. He's just saying when he rolls, he gets filled on one lot, not
I
on two
understand,
lots.
but it doesn't happen.
Yeah, I mean, occasionally they'll move a one lot to get it out of the way, but it really doesn't. It shouldn't make a difference. If that's
It shouldn't.
If
Should
that's
not.
making a difference, that there's something weird.
Right.
Yeah, but that's a fun question, Chuck. I'm just kidding. You're
Not insane.
you're not insane.
All right.
It's all good stuff. And 989 Lossdog, Lossdog. I'm interested, this person writes, in hearing of a few failures and the top 3 to 5 hard learning takeaways that those failures forged into your approach now.
From a business standpoint or a trading standpoint?
I think it's from a business standpoint, but you could talk about it from a trading standpoint either. Either way, it doesn't say.
So we have been super fortunate, at least in my mind, we've been super fortunate from a business standpoint to not have had failures. When I say failures, to me, a failure means that's not a setback, but to me, a failure is a complete loss, and we haven't had those. Now, I will say we pivot, and maybe I just look at it as a failure, as a pivot. I think this show, what we're doing now at Lossdog, is a perfect example of a massive pivot that we made, from where this business started, a number of years ago. It's in a very different place. From a trading standpoint, tons of failures. I could give you way more than 3 or 4. I could give you hundreds, if not thousands. One of the things that we talk about all the time, and it's a trap that I fall into still, bad habit of trading too big. And it's, that's when size matters and size kills. So I think I am doing a better job with it. But, earlier this year, at the end of last year, earlier this year, silver was too big and, it was expensive. But, we've been fortunate again, and again, I'm going to call it a pivot as opposed to a failure, but we've had the ability to look at something and say, this isn't really working. We're going to go in a slightly different direction. And fortunately, things have worked out.
I like this question because for me, a lot of the failures that I've had outside of trading, I mean, obviously we all have, bad losses in trading and things like that. That I think that comes with the territory. And like Scott said, most of my worst trading failures are just, I let my size get away from me. But in business, most of my failures in business are a little different. Most of my failures in business came from either investing in businesses that I didn't really do a very good job vetting at all. or I didn't care to, or I followed like some of my friends into stupid ideas that just sounded good at the time, but they weren't really viable business ventures. Like backing a professional wrestler or buying an oil well or a gas well.
Buying gold, gold mine in Mali.
Buying a gold mine in Mali, or things like that. I mean, I've also been in situations where I was once asked to manage a hedge fund for a fund of funds, and I thought they were legit, and I put a bunch of my own money into it because I was managing it. I wouldn't put money in for somebody else to manage. I was putting it for me to manage, and then they stole the money. So so that cost me a lot of money, and it was just the craziest thing in the world. I didn't even know you could do that. So there's been a lot of learning along the way. I've seen a lot of really smart people do some incredible things, and I've seen a lot of really dumbass people do some incredibly dumb things. And I think over 4.5 decades of being in the entrepreneurial space, the business space, we're better now than we were 30 or 40 years ago, that's for sure. But we're always learning. And I think failures I love failures. I think failures are a very important part of our success. I'll just leave it there.
I wouldn't say you love failures. Failures are critical to progress.
I mean,
because that's if you learn from it.
I'm incredibly competitive, so I hate failing, but when we do fail, we learn from it.
Hopefully. That's one of the things I always talk to
Well, if
my
you don't
team
learn
about.
from it, then you deserve to
You're
lose.
destined to repeat it, and then you're done.
This is a letter from somebody named Dean. What would you recommend to potential job seekers to do, recognizing that the internet and social media information gathering is likely done by HR to supplement an interview? Besides, don't do or post stupid shit. I already told my son that, and he didn't or doesn't listen.
Well, there is no better lesson than going through it. So if it really is an issue, and I don't know that HR teams are looking at somebody's social, they may be.
I mean, they for sure are in
know.
certain businesses, they for sure are.
Yeah. So I know when my kids were applying to colleges, I know that they're not big social posters, but I know that they changed their name on social so that, the schools couldn't find them. I don't know if somebody wants to do that today or if it would even work today, but from my experience as a parent, you can only do what you can do. You lay the foundation, you try to give them as much information and be as helpful as you can. But if your son is going to say, I know better, I don't care, and something happens and he doesn't get a job, my guess is he will then learn from that and say, okay, should have listened to you, and hopefully they can correct whatever they did.
No kid ever said to their parents, I should have listened to you. It's never been said.
I've had that now. I've actually had it happen.
Oh, well, I've never heard that from either of my kids.
What I've said is, what I've had happen more recently is, things that you said now make a lot of sense, and I didn't get it at the time. Not that they, should have listened to me, but that now it makes sense to them because they're at a different point in their life.
I have a different take on this, Dean. That if I am way more scared of hiring somebody that's not on social media. I feel like in today's world, especially in the businesses that we're in, where we're always talking about stuff, promoting stuff, I want people that are comfortable in front of the camera, comfortable talking about crap. I don't really care what they say. I mean, unless it's ridiculous, but I really don't care. And I want people that are social media savvy and that can add value to the business. So somebody that is doing some crazy crap on the internet would not, especially when they're in high school or college, would not bother me one bit. That person would actually be more interesting to me than somebody that says, than some 22-year-old that says, I have no social media presence. That would bother me because I'm like, what's wrong with you? How could you have no social media presence? That's part of your, that's your generation. I want somebody that's out there that's, that can make a stink, that's not afraid to light it up. So, so my take's a little bit different.
You're different. Established companies most likely are not going to feel the same way with that
They
one.
are.
because
They
there's-
are now because they can't. They
No,
can't get.
no. The
interesting.
difference is if you find somebody that's posting, it depends on what they're posting. I mean, if it's offensive,
Of course. I don't want somebody
That-
that's posting, something that's grossly offensive. But if you're posting eating a cheeseburger in your car and comparing
but that's
McDonald's
not
to
what I
Burger
think.
King,
That
that
I don't
is what
think
it
that's-
is.
No, but don't do post stupid shit is not eating a cheeseburger in your car.
Maybe it is.
No, it isn't.
The whole
but
point there
whatever.
is that
we'll move on. That's not what they're referring to. They're referring to doing something that's going to be a comment, a political comment,
I
a
don't know about
worldwide
that.
comment, a religious, just a slur, whatever, going after
of course,
some phobia.
Of course, that makes no sense. But if you're talking about comparing, Chick-fil-A to Dave's Hot Chicken, I'm all for that in your car.
Yeah, but that's not what they're talking about. That's you'd say to me. That's not the question. But
I
I'm
think-
glad that's your answer.
I
All
think that is the
let's-
question.
Let's go on to Steve. Do you think this is slappy?
It's not.
Could you explain more about zero DTE trades? Does zero DTE mean same day of expiration? So what happens to 45 DTE and 21 DTE? Okay, fair question. That's funny. Didn't think about it in that way. Zero DTE is literally like if you pull up a product, so go to SPY, for example, not every symbol has it, but if you pull it up and you can just say, these are options literally listed and going off today. That's it. That's it. 0 days till expiration because expiration is today. I mean, you could trade a 45 DTE in and out. You could day trade that, but that's not a zero DTE trade.
Yeah, I mean, there's not a lot to explain about zero DT trades, but the reason they're so popular is because A, there's no overnight risk, so that's cool, and B, instant gratification, instant pain, instant gratification,
Or instant pay.
whatever. But that's what makes them interesting, and you don't have to wait. And we now have shortened our time horizon for everything that happens in this world. So I mean, personally, I'm a 45 day to expiration, 21 day. Like the 45, 21 days is what I live by. But I have no issue if you want to trade some zeros, and it means same day expiration.
That's it. I mean, just to understand, if you're trading same day expiration, you don't have a lot of room to be wrong.
Yeah, and but then you don't have to be that right either. Usually, the same day stuff. The reason people do it is it's pure engagement. It's a little more like gambling, but you know what? It's I guess
Got
it's fun.
Yeah.
Yeah, I like it.
Yeah.
I don't do a lot of it, but I like it.
Yeah. I mean, when you want to trade it, it's good. I agree with you. I don't do a lot of it, but when you want to do it, it's fun. It's fun to be involved.
Here we have another Dean. I've been following you for years, and on a few occasions you've mentioned selling credit spreads or selling credit puts against the RTY with a bit of a smirk. Like you want to say more, but you don't want to. Calendar spreads, is there a zero DT involved? Measured, planned entries? I'm not sure really what the question. I don't really sell a lot of puts against the Russell, but I do trade the Russell. I actively trade the Russell because I like the small cap index. I mean, I'm not sure how I don't do a lot of calendar spreads. I don't do a lot of zero DTs in the Russell, but like I do have a bunch of. If there was one index ETF that I almost always have a position on, it's probably the Russell more so than it's anything else. Slightly higher volatility, lots of liquidity. I like IWM more than RTY, but RTY options are not very good. And I do trade a lot of RTY pairs trades though, /RTY. But for the most part, I'm a strangle seller in IWM. I don't know about you, Scott.
I don't trade IWM or RTY, more ES or NQ.
Okay.
But yes. But
Yeah,
yes.
yeah. I'm more IWM-ish over the long haul. Sometimes I'll get down a Q rabbit hole, and sometimes I'll go SPYs, but I need higher implied volatility.
Talking about rabbit hole, let's go to Michael in the dog pound. Has your research into the quantum rabbit hole blown your mind yet? Curious what your take is.
Ooh, so, okay. It hasn't blown my mind yet because I'm not smart enough for it to blow my mind. I mean, you kind of have to be, you have to have a little bit of a physicist background, and I don't have anything close to that for quantum talks and stuff and quantum encryption and all this, quantum chatter to blow your mind. What I have found interesting is that I have been trading. I actually bought some quantum stocks this morning. Not a lot. I only got a partial fill, but because I sold some out yesterday, bought some back today. So I have been very active in the trading space. I probably haven't gone down the blow your mind rabbit hole yet, only because it's very hard for me to understand. I mean, I'm having a hard time processing it. I've learned a lot about quantum proof technology, which I find interesting, especially in the world of financial services. I've learned a lot about quantum encryption, and I have been actively seeking investments in the quantum space, but I'm still what I would consider very raw as far as any kind of depth to understanding about how far are we really away from being able to apply some of this stuff, and and is there something here? Like I never wanted to go down. I'll give you an example, Mike. I never wanted to go down like the whole rabbit hole with cannabis, and because I never felt like there was something there that was anything but something emotional. Because of cannabis, which kind of pissed me off now looking back at it, I was very slow to get into the AI space because I kind of wasn't sure if it was another fad or whatever. And so I'm bummed that it took me too long. I'm not going to make the same mistake with quantum because I think there is something I think there's something there. But I hope it doesn't turn out to be like 3D printing. Do you know what I'm saying?
No.
I understand.
All,
I know.
No, don't throw shade at 3D printing, but I get what you're saying. 3D printing was the rage 10 years ago.
Yeah, and I mean, it lasted, it was like cannabis. It was
No.
It was a one-hit wonder.
Cannabis is still here and it's huge. The stocks didn't
You
do
can
well.
say it's as huge as you want, Scott, but the stocks are worthless.
I said the stocks didn't do well, and 3D printing is still massive.
But the stocks did zero. I mean, these are all.
But again, this is my point about the hype. When we talk about AI, we talk about these
But
things.
AI is blown through that. There is no turning back in AI.
All right,
Now the
let's
question
look at these
is,
companies will have this conversation in 24 months, and let's.
well,
take
the
a
question
look at
is in quantum. For me, it's not will quantum be here. It's just that what will quantum be? I don't think it'll be cannabis. I wonder whether it'll be like Bitcoin mining. Like that's my fear is that these quantum stocks.
You don't think quantum has the ability to equal or surpass?
Of course,
AI?
I think it does. No, not surpass AI, but I think it has the potential to be something great. But the question is, I also thought that certain digital asset miners like Riot and Mara had incredible upside, and once they blew their brains out, they've never had another uptick. And so I think I have to be a realist about this, and I want to get involved, but it has not blown my mind yet, and the reason it hasn't is just because I don't think I'm smart enough at this point. At least I shouldn't say smart enough. I should say I don't understand the science and the physicist side to it well enough at this point. I'm not an engineer. It's very hard for me.
Okay. On that note, we are going to go over to market talk, and things have been moving. So it's interesting because SPOOs now are basically where we started. S&Ps are down 46. They were down 55, 60. They rallied back to be down 20. They've sold off. Bitcoin getting hit a little bit down about 1,569 and change. Oil catching a bit, 93.68. Did it trade 85?
No,
Yesterday, 86?
87, I think.
87, so it's 93 and change. You got gold down 89, Nasdaq down 250, silver down 3.25. This is, for me, the big one, and this is the telltale story. VIX future is up 94 cents, and VIX cash is up $1.45. With VIX over 25, we're going to have these swings. So that's a for sure. So long as the VIX stays up here, we're going to see movement like we're seeing. Bonds down 10 ticks to 113.08. As you said, Apple's strong today, up $4. AMD and Moo not doing well. AMD down 12, Moo down 18, Nvidia down 480. And we were talking about Meta, it was down 22. Now it's down 33.
Yeah, I think what you have to focus on today from a trader side, and again, we talked earlier about watching the tape. I think the scary thing today is not the geopolitical stuff, at least not now. And so it's not war related. I don't even think it's crude oil related, or gold or silver today. I think if you have to follow the Nasdaq today, because the Nasdaq is super weak because of Meta and Moo and Nvidia and some of these leaders. When the Nasdaq's down 250 handles, it is very difficult for the S&Ps to rally, and I don't know if they're going to be able to, to keep their head above water today, just because the Nasdaq, to me looks like, I don't know, could be down 400 today. Who knows? So keep an eye on volatility, because if volatility stays bid and the Nasdaq stays down, you're not going to get much of a rally today, even with Apple up, $4 or whatever it is. Which is, if Apple wasn't up $4, it would be really ugly. Gold's come back half the way. Bonds have come back, half the way. Silver's come back almost half. So there's the commodities, and crude oil hasn't moved all day. So I don't think the commodities are the play today. I think you have to watch the Nasdaq. I think you have to watch the volatility, and that's it. And by the way, we're getting ready to roll out our software. And if you haven't signed up yet, please go to Lossdog.com and sign up. If you're new, go to Lossdog.com. Jump on the wait list. Recommend as many people as you can. We can't wait to roll out our technology. And don't forget, there'll be an Unleashed coming out tomorrow. And it's another fun one. We don't do the live show tomorrow. Scott and I in Seoul will be back on Monday of next week. We are going to be here Monday, Tuesday, Wednesday, and Thursday of next week. Next Friday is a holiday for Good Friday. And the Unleashed is on accredited investors. And Scott and I have a very different take on accredited investors. So you might want to take a look. And if you missed my podcast with Dylan Radian yesterday, we had a fun discussion about AI. Is AI taking your job? And a lot of articles about that. I say overrated, but let's take a look. Or you form your own opinion on that. Thanks so much for spending the whole week with us. Thanks for all your great interplay and your calls and your emails.
Yeah. Please send us any questions, any emails, oneluckydog@lossdog.com. And as Tom said, thanks for watching this week. Happy Thursday. And on that note, we're going to have Slash take us out.